Dropped 353 points in Wall Street's worst day of the year. The decline was about 2.3%. Now, that's the biggest drop in nearly 2 years. The sell-off was fueled by the Fed chairman's prediction the big economic stimulus program could end next year. Now, this morning, though, the futures are slightly up.
So don't panic, at least according to financial advisor Ed Butowski of Chapwood Investments. And you're looking at long-term stuff. Most of us are not, sitting there day trading during the day and trying to make quick gains and avoid quick losses. We're looking at retirement being years away.
Well, that's what you should. Anybody who looks day to day is an absolute fool. I mean, nothing that happened yesterday, nothing that happened in the last 2 days where you saw this, 2-day sell-off matters at all. Everybody should relax. It's the first day of summer and the markets are going to be absolutely fine. And what the Fed chairman said, believe it or not, wasn't the reason that we saw a sell-off. We've seen this market move up. We always assign a responsibility for a sell-off because we have to say something. We can't just say, I don't know why it sold off. I mean, that wouldn't, be a good headline. But the reality is that it had a little bit of a correction. People are going to assign the responsibility that the Fed said that they're going to stop printing money and buying bonds. Well, what that did is it it actually helped the bond market sell off a little bit, which made valuations on stocks go, basically up a little bit, or the valuations actually got a little bit more expensive. So here's the takeaway. Don't worry about a thing. Don't change your 401k plan. Don't buy stocks because of this. Don't sell stocks because of this. This was a non-event.
Is it going to keep correcting? Are we looking at even more, of a correction later on this summer?
Yeah, that's a great question. I mean, because selling sometimes begets, more selling. I have no idea. And anyone who tells you they do, they don't know. So what you do is, as you said earlier, Tim, take a long-term perspective, stay fully invested, and go work really hard and enjoy your life and stop watching the headline minute by minute.
Right. All that's going to do is add to your anxiety if you do that. Now, the conventional wisdom has been we were kind of headed for a correction anyway, and I heard even 10 to 15%. Last 2 days was 5%. So if this is the start of a bigger correction and it's going to go down even more, eventually it starts to go back up.
Well, I mean, you would think so. I mean, right now, if you look at from a pure technical standpoint or a valuation standpoint, stocks are still very inexpensive relative to their value. Think about a house. A house has a certain price. Right now, stocks are selling about 12% below what they're valued at. So don't worry about a thing. Now, in 1987, stocks were 40% overvalued. Okay. Today, they're 12% as of this moment undervalued. So relax, enjoy the summer, go have a nice barbecue this weekend.